Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hotspots in the markets for today, Thursday, May 5th. My name is Todd Rich. I am with Nadex. With me, as always, Brian Caprice, the CEO of Keep Trading Simple. We do have some things to discuss today. Clearly, the markets are moving, and we've got several markets moving. In fact, they're moving across the board here at within Nadex products. We're seeing equities, we're seeing foreign exchange, and we're seeing commodities. All of it, all over the place. So, where are we going to focus? One, we certainly have to discuss the stock market rally, where we saw across the board a monster rally in equities yesterday. So we are going to take a look at the charts in the S&P, the Dow, the Nasdaq, and the Russell 2000. So certainly levels there. That was all a reaction to the Fed decision. Once they came out with only 50 basis points, there were some people who were pricing in a probability of 75 basis point hike. Brian and I will certainly discuss that, because what the Fed is saying they want to do and how we're going to get there, it's kind of clear now. They're telling us exactly what they're going to do, and is it really going to? I mean, this is a situation of Jamie Dimon was spot on that the Fed's going to have to do something in very short periods of time and very, very quickly, and they won't be able to do it fast enough. So we are certainly going to talk about the Fed decision yesterday and how it impacted the stock markets. It also impacted fixed income, foreign exchange. The pound yesterday, the dollar started to see some weakness, the pound saw some strength, and then the Bank of England announced their 25 basis point hike up to 1%. They were looking for more over there. The pound getting absolutely smoked. So we're going to be looking at the pound. So U.S. equities, the pound, and when you look at these charts, you're going to go, what happened? And then the other news, oil. Oil also on the move, OPEC Plus. The headline very quickly that they're sticking to their very slow pace of increasing output. OPEC had agreed, first OPEC cut output, and then they agreed to slowly increase output. They're sticking to that very slow pace. They do not, you see, OPEC's going to push out another 432,000 barrels a day. Well, that's all they said they were going to do, and they're not going to do a drop more. Oil, I mean, they don't want to see the price of oil get disrupted. They love oil above $100. They love it even more when it's above 110. So oil also in the move. So a lot to discuss today. Before I flip it over to Brian and we start going through all these headlines and we get a little deeper into equities, the pound, and oil, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. We could see crude oil, and Brian will get much more into this, creeping higher. But really, the fun charts to look at today are, the pound. It's not pretty. It completely retraced the little bit of a run up yesterday on the FOMC here in the States. It retraced that and then just bottomed out. I mean, look at the pound yen. I mean, it completely did a parabolic move retracement, and then the floor fell out of it. Brian, I'm going to flip it over to you, and we can go through all of these headlines because there is a lot today. And that I didn't even throw in there. I know that we had the unemployment claims and productivity numbers, and I know that I don't even know if we have time to cover that today. There's just too much to cover.
Yeah, I mean, definitely an interesting 24 hours. I'm still in shock that the statement was as dovish that it was. That again, we want to front load this, but 0.75 is off. He'll never do a 0.75 is what he said, no matter what. Which I thought it also was a statement, and I think that's where the market really talked off. That they went crazy. It was kind of like, wait, what? Even if it justified, you're not doing like. That's kind of crazy. I mean, some of the headlines with it. I mean, he starts off with inflation is much too high. Yes, being at a 40-something year high, back to the 80s. Yeah, thankfully he's acknowledging it. they're moving expeditiously to move inflation down. Now, again, I'm going to put right now expeditiously on the same list as transitory. That Powell does not understand. We're going to send him some flashcards because they are not moving expeditiously. But hey, whatever.
You keep using
Here's the
that word.
excuse.
I don't
We
think it
knew it
means
was
what
coming.
you think it means.
Yeah,
Sorry.
it doesn't. Yeah, yeah. I think he thinks we're
A
starting a
Princess Bride
journey, but
joke.
that's not. It's not an expedition, right? Yeah. Again, here's the excuse. We knew there was going to be something. The labor market's extremely tight. Okay, sure. We anticipate ongoing increases. Sure. The economy's fundamental momentum is still robust. So yeah, it's much too high. We're going to move as fast as we need to. Where is it? This one. We estimate that neutral is going to be between 2 and 3. We just got to 1. I mean, we're not going to go higher. We won't hesitate. Okay, there's been that's another word, hesitate. We're going to throw that on the top 5 list of misused words by Powell. We can't let wage prices spiral out of control. It's very difficult with the labor imbalance. Sure, certainly possible we can move forward with a more restrictive level, and we're a long way from neutral, but I think we can reach it very quickly. But how are we going to reach it very quickly with little tiny raises that literally I just have to show you one chart?
Well, it all depends on what quickly means. If quickly means in a year and a half to 2 years, then yeah. But I don't think that's quickly.
I guess quickly compared to a decade, but here,
or a century.
here's the thing, and I mentioned this yesterday. If they came out with a dovish statement, came out with a 0.25, anything that was considered weak, look for gold to spike. And I mean, look at this. Gold went from we're up what $45 or something like that in the last since that news came out, and
yeah,
rightfully so. I mean, rightfully so. The statement was such a weak, dovish statement when everybody knew that it was coming. They could have just said 0.5, we're going to monitor it, and it would have been fine and done what it was supposed to do. But instead, he came out with such a weak statement about this. I'm at a loss of words. But again, gold, silver, both being up higher absolutely makes 100% sense. You mentioned crude oil. We talked about OPEC today. Crude oil also started to take off yesterday from FOMC as well, and it didn't have as big a move, but it's already up at $109. Again, we're not slowing inflation down. And what was oil's response? You know what? Let's jump another $4 in the last 24 hours. Basically the last day and a half. So since the oil inventory report at 106, we're at $3 higher. So it got higher. Natural gas also up higher. I had drawn a target for my students and missed it by 2 pennies. It's still up there. Now it's like stabilizing and finding buyers down here at the 830, and it's probably going to get higher as well. And you mentioned OPEC because again, we know that the energies is kind of where most of it is. I had it here and I lost it. Where did it go? OPEC, right here. OPEC basically says, yeah, we're going to stick to the plan. We're not getting involved in politics. I don't care that you don't want to buy Russian oil. The fact is that there's a supply there. If you don't want it, that's your problem. We're not reducing anymore. And again, this is my surprise level. This one, 0. This is exactly what I thought we were going to hear. They're following it exactly to what they thought they were going to be doing. And I don't actually expect them to change anything. What is this? The lower oil prices. Yeah. So again, remember the United States, we're already releasing 1 million. Can we go to 2 million? I don't know. Can we drain the entire strategic oil reserve because that's what some people think we should do? I don't know.
And by the way, you mentioned nat gas too, and I forgot. That's something else. I don't know if we're going to get a chance to discuss. Is we got the nat gas inventory report later this morning.
Inventory report's coming today. Yeah. So, this is why a lot of these headlines are really great. I love it. It's like, we don't need Russian, but the reality is you do. I mean, a lot of these headlines, I guess it's great for voters and topics and headlines, but the reality is that the demand is there. I mean, and thankfully, China has been at that point where they're locking down a little bit. God forbid China lifts that Shanghai and they're like, okay, our demand has returned to full speed. Then where the heck is oil going?
By the way, that was one thing that OPEC did cite. OPEC cited, listen, we're going to stick to the plan. We're not going to do any more.
Yeah.
Yes, we know that there's challenges with Russian supply, but we are seeing, and this is how they counterbalanced it. They cited weaker Chinese demand.
Yep.
And that's a temporary
tight
thing.
labor market.
But they played that. They played that to a T. They're like, I know Russia, but China is doing this, so it washes out.
Yeah, I said that a couple of days ago. You're like, no, this means there's extra supply if no one's buying it. No, it just means that it's being transferred from one place to another. I mean, OPEC said yesterday that you can't replace it. It's nice that you think you can, but we know that you can, and trust me, they know the oil market very, very well. They went from a position of having almost no power left in the oil market to now they're all the way back again. Trump had got us out of it, and now Biden put us back into it where we're dependent upon OPEC. And we're calling them and asking them to produce more oil. And you know what their response is? No. We're going to, again,
Yeah,
our
I don't know
strategic
if that
reserves
was
going down. It's
so much
crazy.
a political thing as we didn't expect Russia to attack the Ukraine. I didn't
Well,
think anyone had anticipated a war
yeah,
and then Europe's reaction to, it's
yeah.
this one's kind of a random one.
Well,
What
it's the Boy Scout
surprises
motto,
me
right?
is with the prices as high as they are, what's interesting is what you're seeing in the energy companies. You would think these energy companies would start drilling more for gas or for oil.
Takes
Um,
two
but,
years.
but
They were looking
instead
for
of
they were
doing
looking for
that,
permits. Yeah, they were looking for
well,
permits, and they have them, but they can't. The production facilities won't come online for 2 years. And again, the
and by then
conflict is not
it'll
expected to
be
last but
over.
2 years.
Well,
Yeah,
and what they're
yeah,
doing is they're taking all the money they're making
and
and they're
hiding.
buying back their stock.
Yeah,
They're
they're
buying
hiding.
back their stock and they're retiring debt. So what they're doing
Yeah,
is instead of increasing production, and in the States, we should be able, I mean, they could take that money, invest it, and get production up, and the US could replace a chunk of Russia. But what they're doing instead is jacking up their stock price and, hey, make hay while the sun is shining. Yeah, they're retiring
making
debt.
money.
And
Yep,
so they're not
yep,
going after the oil or the natural gas. They're
yep.
going after their own stock prices.
Yeah, yeah. I mean,
That's
it's
capitalism.
yeah. I mean, they have a duty to shareholders. Their duty is to make them as much money as they can, and they're fulfilling their duty. And again, the administration, like I said, Putin is going to win the environmental award of the century. Because of
Hey,
everything.
maybe that's a good thing, for our
Yeah.
children and our children's children. So take it
Yeah.
where you can get it.
I
I
mean,
don't know.
yeah. I
Find
mean,
a silver
if you got,
lining.
you always got to look at it, in a positive way. There you go. Putin is going to get the
Yeah.
environmental. He's going to get the environmental award of the decade. For driving us towards green energy. So
Yeah.
anyway, we just had a little while ago at 7 o'clock. We did have the BOE raise. Now the BOE did. It was 100% on. It wasn't the 801. It was 100% on. Bam, we're raising it. But they had some really strange comments, and I think a lot of this probably had to do also with what Pal just said. Again, remember, if you have a very expensive currency, people do not buy from you because things are expensive. So there is a benefit, and this is the whole thing that's going on right now with Japan trying to keep their currency weak and being like, it's great for us. Russia looking at the same way. China also pegging their currency, keeping it artificially low and saying it should be lower. Because again, countries stimulate their economy by exports. If you looked at, we had our trade balance 2 days ago, it's horrible in the United States. Horrible. Nobody will want to buy American goods or even American services. That's the more important piece of it.
Yeah.
Um, BOE basically came out, and I don't know if they're like, hey, you know what, you're doing it, we got to do it too. They made some comments that we have an uncertain outlook, right? We're not really sure what's going on. There's been a decision on there's been no decision to conduct, active sales. Again, they're not sure what they're going to do with bonds yet. Where is it? The BOE forecasts do not meet the technical definition of a recession, but they do incite a significant slowdown. So they've raised it 4 times now, and nothing so far. Now we've gone a little bit faster than that, but they started sooner than we did. And this is right here. This is why the pound is down. This single statement right here. We disagree with those who believe interest rates should be
Yep.
raised much higher. So your inflation is continuing to rise. You're seeing slowdown already, but you're not in recession yet. And you're like, no, that's it. We can't raise anymore. We're already seeing a slowdown. We don't want to go into a recession. But
What a
inflation hasn't
weird
stopped yet.
scenario. I mean, they're
Yeah.
stuck
Yep.
between harming the
Hmm.
growth of the economy
Yep.
or dealing with inflation and trying to harness
Yep.
that in. And they're
Yep. And
how do you balance
this
that?
is perfect headline. The BOE is navigating a narrow path
Yeah,
on policy. It says BO's,
that's it.
and it says like UK inflation is well above the target in the near term, subsequently falls below target. They're still stuck on this. It's transitory. Eventually, it'll go down, but at what cost? How many years are we going to have this? And remember, once people get used to paying these prices, that's it. It's not like we're not talking. At no
Yeah.
point has anybody mentioned a deflationary environment, and that's why we're seeing gold move today.
It's going to be a
I
Pyrrhic
got an
victory
email
in
and
the
people
end.
said, "Hey, listen, should we start shorting gold yet?" The answer is absolutely not. This is not a time to start shorting gold. Wait till we get back up to some technical levels. Probably 1920 is probably the first place that I would start looking to short gold. And the reason why is because everybody's saying, I mean, they're still stuck on that. I know it's well above now, and it's so far out. We've it's hard, right? Hard work. but they're not doing anything to stop it, as well as they're not talking about any deflationary period. So guess what? If you like the gas prices now, they're here to stay.
Yep.
If you like the food cost, they're here to stay. At no point is anybody talking about getting them back to what they were a year ago. This is the reality that people are not talking about. So it's nice that they want to get back to neutral so it's not rising anymore, but they're not talking about creating an environment where the prices come back down to what we're used to.
Everything's being impacted greater
Yep.
too with what's going on in Ukraine.
Yep.
Like even for food, they
Yep.
are truly
Yep.
the breadbasket. They
Well,
were
they are. That's
feeding
the fields. And again, Russia and Ukraine are huge grain areas. They're
that went to
fertilizer
Africa. I mean,
areas. They're seed areas. Yeah.
that
And we
Asia and
already have a food
Africa.
crisis.
Yeah,
Yep.
it's an absolute catastrophe. Um,
Hmm.
and you see that, and I mean, not
Yep.
we don't need it here in the States because we can grow our own food, but there are parts of the world where they simply cannot. And a lot that was all being coming out of the Ukraine, and that's all the wheat, the corn. It's just getting turned off.
Yeah, and we actually do. There are some actual food shortages here as well. As far as planting goes, they couldn't get the seeds because we don't make the seeds here. We buy the seeds from over there, and we
Yep.
kind of put blockers on. So there is actually somewhat of a minor food
This
shortage in the United
is
States.
yeah,
But this is the other
sad.
thing that's weird about this is, and again, this is why I think what they're talking about and why they're so concerned about the labor market is for the second consecutive month that job cuts were up. That companies are starting to cut now. It's not massive amounts. It's 24,000 people, but it's up 14%. That's cut, quite a large amount. So looking at, and again, I want to make sure we get back to the charts today. So, looking at this right now, I mean, VIX is not doing much. It's up a little bit from where it closed. Dollar is up a little bit, and again, it's kind of retraced what it's lost because, again, it's still, it had the big fall, and again, we look for these retracements all the time. You're seeing a lot of the indices up at areas where you may say, hey, listen, is this a pullback day? I would say probably a lot of the news is already baked in at this point. Inflation is still continuing to get higher. All the same factors, all the same earnings, job cuts, all of it's coming back in again, and there has to be profit taking from yesterday. So, although it was a bone, and we even talked about it going down first, and it did. It went down first before going higher. I do think there's probably short opportunity, and would not be surprised today. Now will be the day like, oh, they raised at 0.5. It's so bad, even though it was such a great, it was such an easy and really, I mean, every single one of these kind of pulled back. Kind of did the same thing. It was up, it pulled back to a level, and then just absolutely took off. And even the Russell, I mean, we talked about yesterday about that 50% retracement level. We talked about if we could kind of base down here, if we could get down there and be there ahead of time, but no, it pulled up and then literally came down and springboarded right off that. A monstrous move. I'd say today is probably more of a red grindy day. Um, just because everybody's like, it's up. I need to get in this too. And it's kind of just that reversal play back down. But the reality is, yes, things are tighter now. They are more expensive to loan. Is it necessarily a positive thing? No, but it's not what the market wanted. Jamie Dimon has said it. Basically, everybody except Powell and the members on this board have said it. I can't wait to hear what Bullard has to say tomorrow. I think that's going to be absolutely massive. But as far as today goes, there's no other additional news out there. I would say that the pound will probably find a bottom and start to retrace. It is a massive move. The euro pound being up 100 pips is a lot. But, if you look at every single one of those, it doesn't matter here. We'll pull out euro pound. We had this level here, and again, it bounced off of it twice, so we didn't expect it to hold a third time. This is a massive move, okay? If we look at even just the daily, this is the euro pound right now, guys. If you look at the daily euro pound ATR, it's 62, okay? Just from where the news release was till now, an hour and a half, this is 112, 114. So it's 2 times the daily ATR almost instantaneously. This is typically what we look for parabolic retracements. Is it going to happen today? It depends. I think we get one more kind of surge or a base in here. We would look to kind of overcome this in there. Pound yen, kind of the same thing. Remember, the yen is horrible, right? The yen is weak. The yen is weak. The yen is weak. It's is it? I mean, it's driving it all the way back down again. So, kind of the same scenario, but it's the same thing. And look, the same little pop back up again. Have you taken this base level right here? Magically did the same thing. A level right above, it kind of got close. It pulled back right beforehand. The news came out. It popped up, grabbed those sellers, and boom. And this was also a massive move to the downside. 265 pips instantaneously. Pound dollar. And again, how about this for a chart, right? We talked about reversals and things of what could happen. I missed the top by a little bit. I apologize. I missed it by just a tad, but had you readjusted it? Look, if you readjusted it, it's right there. There's your basing level. There's your failure to go higher. We talk about it all the time. There's your parabolic retracement back down again. And I would say, and again, yesterday I talked about this. We were looking for this to drive down and bounce off of this level. Now, again, it's funny. Now, if you raise your interest rate, it's considered a weak sign for your country because we
Because you
raised,
didn't raise
went
it
straight up.
enough.
They raised, it went straight down. But there's always that reversal. We drew this yesterday as being the downward side target as a bounce of 123.72. Well, guess what? We just tagged it right now. Their session is over. The U.S. is coming online. Can we see, some U.S. weakness or strength come back in? Maybe. It kind of everything is wonky. It's backwards, right? But we did just bounce off. We know that we got buyers there, and it's a parabolic move. Do we see a little bit of a bounce coming back up? I would say probably. Whether it's today or tomorrow, I mean, there's not really many other headlines out there. The only thing we got tomorrow morning is non-farm payroll, and could non-farm payroll throw it all into a tizzy? Sure. The unemployment rate, again, the labor market is tight. The unemployment rate is coming down. It's like, what? And again, they are different. And again, average hourly earnings expected to stay at 0.4. Again, it's not outpacing inflation at this point. We know that inflation is much higher than that. So every month that the Fed is keeping this policy, we make less money and we have to pay more money for things. And our debt level now is, people are not talking about it because they don't want to mention it. But the debt level, I saw a figure yesterday. The average household debt level is really starting to get into scary places again.
Yeah.
And this goes back into the dollar as the world currency. It's our debt level in the United States, which is going to be the ultimate factor that drives the ratings of the dollar down, because we have a special, kind of like asterisk right now. So,
I mean, if you've got a floating rate mortgage or your car loan, or even student loans, I mean, I don't even, where else are people, and credit card debt, that's definitely floating as rates go up.
And this is the scariest part right here. The U.S. trade deficit hits its highest on record in imports. Okay?
Yeah.
It's the highest on record. If the dollar suddenly tanks because we lose that status, look what our trade deficit is. How much more we're bringing in versus what goes out already.
Yep.
Yeah. That means we're buying all this stuff. We can't afford this stuff anymore. And do we have all this stuff here? We don't. So, yeah, we talk about shortages. Yeah, it gets scary. So, but what I would do is,
I'm watching crude oil too as we go.
Oh, is it going higher?
It's just going higher.
Yeah, I mean, this is OPEC. Like I said, it's a very serious game. I would not be looking to short OPEC, short OPEC. I would not be looking to short oil today. Based off of where we are right now, guys, there is a level right above where we are, and again, maybe we get a little bit of a reprieve in this level, potentially, but
where is that?
110.73 to 111.31. Yeah, so basically in 2 days, we've gone from, what did I say it was, 103 up to 111? Is that what it was for
inventory? Below 103. It was 102, down near 102.
It was for inventory, that was 105.
Oh, yeah, 103. Yeah. Sorry.
$6 in 2 days, and again, our strategic, this is where you question, is the strategic oil reserve release really helping? The answer is not so much. So there's better policies we could maintain at this point, but I would not be looking to pick a top on this one. But thankfully, natural gas is actually a little tiny bit in the red. It's down to the low of 836. So yeah, and gold as well. But those are the big numbers. I think 1928 gold is what we're looking for. Silver, you can see it did the same exact thing. You're like, oh my God, more free money. Thank you. And we went all the way back up again, but it is finding a top. I would look for this to revert probably a little bit, because again, still trying to contagion on that one. All the indices as well. Again,
a little bit in the red.
Yeah, I think they're all trying to retrace back down again. Target levels I would have in any of these is Russell at 1891, YM down at 33,200, NQ. I could see this one come in. I mean, this would be a 50% retracement from that top. That 50% retracement is 13,136. So that's 250 point drop in that one. And then again, ES, if we take this all the way back up again, magically around the 50 is that same level we were talking about yesterday. And that was right where the news was. That would be a perfect parabolic retracement move down to 41.80 and 50. So, all right. A lot going on. So
that is a lot. I mean, listen, there's days when we've got nothing, and then there's days like today where we've got everything. And we clearly went a lot longer today. With that, if there's any questions for Nadex, please email us, customerservice@nadex.com. We're here to help. Questions about your account, our products, the platform, anything. We're here to help. You got to reach out to our team. Email them, customerservice@nadex.com. Brian and I are also accessible. If you got any questions for Brian, if you want to hear some more, you like his coaching style, please reach out to Brian. Support at keeptradingsimple.com. Support at keeptradingsimple.com. I'm also accessible if you'd like to share insights on what you'd like to see us doing more or less of. Todd.rich at nadex.com. We did cover a lot today. We had the big equity rally yesterday, pulling back a little bit this morning, but that was because people, Powell said 50 basis points. As soon as he said 75 basis points was off the table, very dovish. The markets took off. I don't know how they're going to get to the 3% mark as neutral with 50% basis point. If we're at 1, that's another year's worth of raises. So quickly isn't even on the table if you do the math there. We got OPEC Plus, not they're increasing production, but no more than what they've already agreed to. Oil taking off on that news. And then you got the pound getting crushed with the Bank of England only raising 25 basis points. People were expecting to see more, get a little bit more aggressive around handling inflation over there. They've got the same problem we do, but they don't want to spur a recession. So yeah, we're all kind of between a rock and a hard place. With that, Brian and I will be back tomorrow morning. Please reach out to us if you've got any questions. We are accessible. Otherwise, we will catch you tomorrow morning, and good luck in the markets.